Jerome Powell and the Fed are going to be forced to cut interest rates, but it might not be because of the reason that you think. It is not because of Donald Trump's tariffs or anything else. And will the United States find a way to cut interest rates without going through the Fed? I'm going to be going through all of this. But first, let's dive in to the Bank of England and why they cutting interest rates right now is a huge sign for the United States going forward. Of course, the Bank of England is now poised to cut interest rates in May, but why is it? It's because they've had their fair share of stagnant figures when it comes to all of the employment numbers and everything else. So the rate of the UK unemployment has remained unchanged in the last 3 months. New analysis released on Tuesday revealed that the unemployment rate, people aged 16 and over, remained at 4.4. This is above the estimates from a year ago, but largely unchanged. This also released that the weekly pay grew by a whopping 5.9% for 3 months in February. This is the same as the previous quarter, which had been held at the highest level since April of last year. So let's go back and review why the ECB and other banks around Europe are going to be now forced to cut interest rates and what this means for Jerome Powell and the Fed. Because many know that the Fed, although they are the leader, the United States has the global reserve currency, the Fed is always tailing everybody else. Everybody else bends the knee right before Jerome Powell and the Fed. And it's interesting what we saw Scott Bessent come out and say as well about the potential of this and the recession and everything else. But let's get back to the point here about the Bank of England and why they're poised to cut interest rates. Well, allegedly, their inflation fell more than expected in March, paving the way for the Bank of England to cut interest rates to 4.25%. Their CPI fell to 2.6 from 2.8 to 3. So, as many of you know, I love saying that the greatest lie is CPI. But hey, maybe we can trust England. Wink, wink. So the Bank of England will look at today's inflation and wages when making a decision about whether to hold or cut interest rates. Most of the economists are predicting that the main borrowing rate will be cut on 8th of May from its current 4.25%. So let's look at the central bank rates around the globe. When's the last time they all cut? I mean, look at these things. Some of them are absolutely insane. Obviously, we've got Argentina, who has been essentially suffering hyperinflation here. Now going forward and looking at it, their bank rate at 29%, absolutely astronomical. But if we keep on going down here, right, we could find the United States at their Fed funds rate at 4.25 to 4.5. The Bank of England is up here somewhere, the Eurozone at 2.5%. And they don't have the Bank of England here specifically, but it is at the 4.5% that we saw, right? So, oh yeah, UK, what am I thinking here? Obviously woke up a little bit blind this morning because it's right on top of each other. But what we're seeing is that the Fed is going to be forced because many countries like the UK are going to be cutting first right before the Fed makes that decision. So central banks' balance sheets and policy rates have been a huge topic of discussion for years. They've been raising interest rates to fight inflation since 2023, and they continue to raise interest rates, keep them high. Higher for longer was the battle cry of Jerome Powell for the longest time. Now we have a different battle cry. They're all calling to cut interest rates. Use every single tool possible. That's a little foreshadowing for later. But the central bank balance sheet, what they've been using is essentially, hey, raise interest rates, fight inflation. keep it as long as possible. So the Eurozone and European central bankers are now looking to cut that interest rates and get everything started, get everything back to where they would like them, right? So the ECB could cut its interest rates on Thursday to boost its economy that's struggling to grow. As consumers burned by inflation warily eye price tags and businesses to try to navigate political turmoil leading economies in France and Germany. The cut comes a day after the U.S. Federal Reserve held off on reducing rates. So, as you can see, although the United States is the leader in all of this, central banks around the globe do not necessarily follow the United States. We see a lot of times that the ECB and others, the Bank of Canada and all of these other central banks around the globe, tend to lead the United States opposed to, necessarily looking at, opposed to necessarily looking at the Fed as a, I guess, leader or a, tell me what to do, boss kind of relationship. So the ECB's governing council lowered its benchmark rate by a quarter percentage point to 2.75 at a meeting at its skyscraper headquarters in Frankfurt, Germany. A little foreshadowing. Skyscraper headquarters. Christine Lagarde said that the disinflation process is well on track. Makes you think, folks. Do you really think that the lizard Christine Lagarde is really telling us the truth with all of this? Because as we saw, there has been no growth in the economy. If there hasn't been any growth, wages, unemployment has been stagnant, then what is that all telling you? That's telling you that the inflation that they so-called claim is over is not just yet. And so we're going to continue to see that start to spike up and raise up, right? So we're going to keep looking at these differences here and keep looking at that. And now, what are we going to see here? Are we going to see the Fed cut interest rates? We see it drop all the way to 18%. I love tracking this. And if you guys have been coming to my live streams, you know that I've been looking at whether or not the Fed is going to cut interest rates using the CME Group's tracker. So now they're sitting at 18%. Let's refresh it just to see. Yep, still at 18.1%. And that means it's less and less likely that the Fed is going to cut interest rates. Now, the interesting aspect of all of this is there's going to be leaders, and the ECB, the European economies seem to be falling by the wayside. So what are they going to do to combat that, right? What are they going to do in order to continue to watch the ECB crumble underneath their feet and all of the other economies have essentially, fallen by the wayside? Well, Scott Bessent came out and said something very interesting. He said they're going to, quote, use all of the tools in their toolkit in order to cut bonds and make sure that everything is saved. And it's interesting because this Scott Bessent is not a part of the Fed. The Fed is allegedly a privatized group. Scott Bessent's a part of the United States government. So will the government utilize some of these quote unquote tools, find some sort of workaround in order to conduct quantitative easing or money printing or lowering interest rates, what have you? Will the Fed essentially be interfered with by the United States government? Because we have Scott Bessent coming out and openly saying China won't weaponize U.S. treasuries, citing the risk due to buybacks. So, hey, we're at this economic war with China. It's all good, though, bro. Don't worry about it. Even though we have the ECB openly saying that tariffs clear the way for an ECB interest rates cut because it's helped with inflation. But what's going on with China and the United States? If China starts selling treasuries, they'd have an effect on the price, but more importantly, they'd accumulate dollars. And what are they going to do with the dollars? Little interesting here. He's saying the quiet parts out loud. He's essentially telling China, hey, call our bluff with all of this, right? What do you guys think you're going to be able to do when we continue to pull off these tariffs, keep interest rates high? So if they sell treasuries, then they would have to sell RMB, and it would strengthen their currency. And they've been doing just the opposite. They've had a weak RMB and yuan policy. So it really serves no purpose for them to weaponize treasuries. Although the United States has weaponized these tariffs with China in order to help out their buddies in the ECB. So now the ECB will cut, looking at a 94% chance of a quarter-point interest rate cut from the central bank and a close to 6% likelihood of a target of 50 basis point or larger. So it looks like the ECB, as we've stated here, is poised for a rate cut. Now, if you're poised for a rate cut, you're most likely going to cut rates. These central bankers like to have interest rates low. They like to have less tension on the market. They theorize that, hey, this is going to allow the economies to grow and scale and continue to push things forward. So is that going to be beneficial? I always love to look at gold as a sign of where the market believes that inflation is at. Little dramatic pause for the folks at home. And gold this morning reached an all-time high. So if the number one inflation hedge in the market is telling you that, hey, inflation is not over, are you going to listen? Or are you going to listen to the ECB, the Bank of England, all of these guys essentially telling you, hey, inflation is over. Look at CPI. CPI is the lowest it's been. And we're going to get Market Open live on this live stream here with you guys so we can see how the market is reacting to all of this news and the recent tariffs. Essentially what we're seeing already is pre-market. The market is down or just about flat at 0.17. We've had a lot of volatility, especially with different equities involving with China and other things. We've seen AMD. Let's actually pull up that chart. We've seen AMD fall off a cliff. We've seen NVIDIA have a lot of craziness going on. So let's look at AMD, Advanced Micro Devices, with this big old red candle here. We don't like to see those red candles here, folks. As many of you know me from my other channel, Green Candle. But, you know, we don't like to see that. And a lot of these things are because of the tariffs that, you know, the United States is implementing. So it's affecting the market on all aspects. And so eventually, once these tariffs get either implemented, backed off, what have you, because Trump seems to be flip-flopping, at least on some of these. If he continues to do that, then we're going to see some interesting things here, and the Fed is going to be forced to cut interest rates. So if you haven't already, please smoke the like Cheech and Chong, as I'm trying to bring you guys some of the best market updates here early and often, because what we're seeing is the UK is going to be leading the charge here very soon, with the United States essentially creeping behind, looking to cut interest rates in the very near future. And hit that subscribe button, tell a friend to tell a friend, hit the subscribe, the bell notification so you guys know when I'm going live. And thank you guys all for tuning in to another great live stream.